Home sellers are slashing prices.
Slash it. Slash it.
And we're talking about record-breaking price cuts here. March of 2025 might have become one of the most significant turning points we've seen in the housing market in over a decade. More homes saw price drops than we've seen in any March going back at least 10 years. So what's going on? Why are so many sellers slashing their prices right now? What does this mean if you are buying? And what does this mean for you if you are trying to sell your home right now? In this video, we're going to break it all down. We will look at the national data, dive into why this shift is happening, where it's hitting the hardest, and what you should be doing, whether you are a buyer, a seller, or just trying to keep an eye on the market. But before we dive in, if you find this info helpful, go ahead and hit that like button, subscribe to the channel, and hit that notification bell. I try to post new and useful content every week, and it really helps the channel grow and helps more people stay informed. Now let's jump in. So in March of this year, almost 34% of homes on the market had a price cut. That is a huge number, and it's the highest we've seen for any March going back for more than a decade. Just for comparison, last March that number was 31.7%, still a really high number. And if you go back to March of 2021, during the peak of the pandemic buying frenzy, only 18.7% of homes saw price reductions. That tells you just how dramatically the market has shifted. For the last few years, sellers have pretty much been in the driver's seat. Homes were flying off the market, most often with bidding wars and waived inspections. But now, that dynamic is changing, and fast. We are seeing homes sit on the market longer, sellers adjusting expectations, and in a lot of cases, dropping their prices just to compete. So what is behind all of this? Well, it's a mix of affordability challenges, rising supply, and broader economic hesitation. But let's start with mortgage rates. As of early May of 2025, mortgage rates are still hovering around 6.7% for a 30-year fixed loan. Now that's a slight dip from earlier in the spring, but not enough to move the needle for many buyers. Even though the typical mortgage payment is about 6% cheaper than it was a year ago, the fact remains a 7% rate doesn't feel affordable to most people. There's very little urgency to buy right now unless the right house comes along at the right price. And that hesitation is showing up in the numbers. Pending home sales were down at 10% year over year at the end of April. Single-family contracts came in 8% lower than the same week in 2024. Condos were down 19%. And perhaps even more surprising, home prices took a dip too. The median price of newly pending home sales was $395,000, down from $399,000 at the same time last year. This marks the first negative year-over-year price reading we've seen in almost 2 years. Now that doesn't mean that we're heading for a crash, but it does signal that the combination of high rates and weak demand is finally putting pressure on prices. And then there's inventory. Nationally, we're sitting at around 744,000 unsold single-family homes. That is 33% higher than this time last year. It's more than the inventory peak we saw in October of 2024, and it's significantly higher than we had during the pandemic shortages. We're finally moving out of that extreme low supply environment, but demand just hasn't caught up quite yet. In fact, it's lagging behind. New listings did rebound after Easter, with about 78,000 new single-family homes hitting the market, up 12% from the prior week. But sales only rebounded about 5%, which tells you a lot. Inventory is building faster than demand, and that imbalance is pushing sellers to adjust their prices. But it's not just about price cuts either. There are more seller concessions, more homes sitting longer, and fewer listings going into contract right away. In fact, only about 15,000 homes went under contract immediately after hitting the market at the end of April, a sharp contrast to what we saw even a year or two ago. All of this points to a market that is shifting. The pricing power is swinging back towards buyers after many, many years of being in favor of the sellers. Now, not every market is feeling this shift equally. Here in many areas of Northeast Ohio, median home prices are still up year over year, but that increase is much less than it has been. Florida is seeing some of the most noticeable changes. The median home price there dropped 1.7% year over year in March. Now that might not sound dramatic, but for a state that led the post-COVID price boom, it is a clear reversal. Texas is right there too, Austin and San Antonio are seeing higher days on market, more price cuts, and smaller buyer pools. In Austin, monthly mortgage payments dipped 1% month over month. Now that might seem like good news for buyers, but it reflects a softening demand. And then there are the boomtowns, Tampa, Phoenix, Las Vegas, where price appreciation got way ahead of local incomes. Those areas are now seeing the highest percentage of listings with price reductions. Even parts of the Northeast, Connecticut, New Jersey, New York, all saw a late April surge in new listings, which is unusual for markets that have remained tight. If that trend continues, those areas could start to feel similar pricing pressure. So what does this all really mean if you're in the market to buy or sell a home right now? Well, for buyers, you have more leverage than you've had in years. There's more inventory. Sellers are more flexible, and nearly 45% of homes sold in the first quarter of 2025 included seller concessions. Whether that's money towards closing costs, rate buydowns, or repairs, that just means you have room to negotiate, ask for contingencies, and make offers that would have been unthinkable 2 or 3 years ago. We're also seeing fewer bidding wars and more price reductions. So even if you're buying with today's higher interest rates, you might be getting a better deal overall. The key is preparation. Have your financing ready to go. Know your numbers and work with a great agent who understands how to navigate this market. You still need to be financially prepared, especially with interest rates where they are, but you don't have to feel rushed. You can stop, negotiate, and take time to be strategic. In many cases, patience and persistence are paying off for buyers right now. For home sellers, well, it's time to be realistic. For the most part, the days of listing your home on Friday and having 10 offers by Saturday afternoon are gone. It's definitely still happening in many areas, but overall, buyers are being more cautious. They have more options, and they're not as willing to overpay as they once were. So what can you do as a seller? Well, price it right initially, and make sure it shows well. Presentation really matters in this environment. Homes that are clean, decluttered, updated, and staged well are the ones getting the most attention and still getting multiple offers. Homes that sit too long without movement are more likely to need a price reduction, and buyers notice that. The longer your home stays on the market, the harder it can be to sell without reducing the price or offering extra incentives. And if your home does need updates or repairs, consider offering incentives instead of trying to list high and hope buyers overlook the issues. That strategy may have worked when inventory was tight and buyers were desperate and offering thousands of dollars over asking price just to find a place, but today, not so much. The market isn't rewarding overconfidence anymore. Buyers are looking for value, and if they don't see it, they're moving on. So what's next? Well, looking ahead, a lot will depend on mortgage rates and overall economic confidence. If rates dip again like they did last fall, we could see a bit of demand rebound. More buyers may jump back into the market, especially those who have been waiting on the sidelines. That could help stabilize prices and soften the pace of inventory growth, particularly in markets where supply is just starting to rebuild. But if rates stay near 7% and buyers continue to hold back, price cuts and seller concessions are likely to stick around for the foreseeable future. We're already seeing signs of fatigue in the market. Fewer immediate sales, fewer contracts, and slower rebounds after holiday weekends. That tells us demand is still on shaky ground. And if we see another economic shock, like a new round of tariffs, job losses, or continued inflation, that could tip the scales even further. In that case, we could see deeper price cuts, more listings pile up, and sellers getting even more aggressive with incentives as inventory continues to grow. Right now, the market is in a fragile balance. It's not crashing, but it's definitely correcting. And as we head into the summer months, how buyers and sellers respond to these conditions is going to shape the rest of the year. So to wrap things up, price cuts are at a decade high, inventory is climbing, and demand is still shaky. If you are buying, this is your time to plan and be strategic. If you are trying to sell, well, now's the time to adapt. Now, I'd love to hear from you. Where are you at and what are you seeing in your local market? Leave a comment below and let me know. And if you want to stay ahead of the next shifts in the market, make sure you subscribe to the channel, hit that notification bell so you never miss another video, and don't forget to give this video a big ol' thumbs up. Thanks for watching. I'm George Poporad, and I'll see you in the next one.